Are you recording? Great, great.
Great. Okay. Hi, good morning, everybody. Pleasure to join you in your webinar that is already in progress. And we're talking about a slightly different topic on these indirect costs. Could you advance, please, Shannon? Thank you. So basically, everything I'm going to talk to you today is coming from these two resources that we've identified here. And I think we send out these slides, right? So these are active links. People can use these links. If you have not seen this indirect cost toolkit, HUD issued that in this spring sometime. And it really, for the first time, although folks have been able to claim indirect costs on these COC grants for some time, this is the first time HUD provided any clarification about that process. And so it's a very, very useful tool. And not only that, it's sort of a governing tool for our process as well. And the other really important resource is a few years back, HUD basically changed the uniform administrative requirements. You may recall years ago, we used to talk about, circulars A133, A88, there were a whole A122, there were a whole mess of those OMB circulars. They've all been transformed into what was called the super circular, because the federal government says stupid things like that. Or we can call this 2 CFR 200. So this is where all the uniform administrative requirements are for any federal grant. This is just not applying to HUD. This is across the government. These are the uniform procedures that the government follows, and therefore they are governing. If you could advance to the next slide, please. Okay, so when I put this presentation together, there are incomparable Lauren Peretti said, could you upfront tell people what the heck the benefit would be? We talk about these indirect, why talk about what is the benefit of this to anybody? So there really are, it really varies somewhat depending on whether you've got a renewal grant or a new grant. In a new grant, it's tabula rasa, right? It's a blank screen. So you could basically, if there is sufficient funding availability, you could indeed budget for your full amount of indirect funds as well as admin funds. And basically, you can recover more of your actual costs of administering a federal grant if you use the indirect cost rates. And it also would allow you to basically increase the amount of funding that's available to cover the core administrative operations of your organization without at the same time taking away resources from the participants that you are serving. So there's some real advantages on new projects. As has been mentioned many times in the prior presentation, you all know it already. Once you've got a grant with HUD, basically the dollar amount of that grant is frozen. The only thing, there are some slight changes that will happen if the fair market rents increase. You will see some increases in the housing cost side of your application, but otherwise the costs do not change. So if you try and add another cost item such as indirect costs, obviously that could come at the expense of some other funding items. So it doesn't, if you've got an existing grant, claiming indirect is definitely not going to increase the funds that are available to your project. However, if you've got an existing grant and you have difficulty fully expending all of the dollars in that existing grant, by claiming indirect, it can give you another potential avenue in which you can fully expend your grant. There is also, and I'm going to explain this in a little more detail at the end of this presentation, but under certain circumstances, if you are allowed to claim indirect costs, but you aren't actually able to collect them because there's just no room in your budget, you're eligible to do it, but to do it would mean that you couldn't draw down on your other budget lines. Therefore, the indirect costs that you are eligible to claim, but you can't draw down because the funds aren't there available for that, would consider to be unclaimed indirect costs. And under the right circumstances, you could count that towards your match. So for renewal grantees, the potential benefit is either maybe spending down some funds that you've not been able to do, or if you're finding the match to be a challenge, you could potentially use indirect costs as a way of meeting some of your match. And I will describe that in more detail as we get to the end of this presentation. Next slide, please. Okay, so basically, There's always one thing that's always very confusing is the difference between direct and indirect costs. And it becomes somewhat confusing because the government goes out of their way to say that we are not going to define that certain costs specifically are always going to be direct and certain costs are always going to be indirect, because it really does vary organization by organization. It really becomes up to your organization to identify those costs that are considered to be indirect. And again, indirect costs are those costs for a common or joint purpose benefiting more than one activity the organization pursues. So oftentimes, your fiscal staff, your information technology staff, things like that. These are all kind of common costs that spread across the entire organization. It's really hard to always allocate those costs to any particular activity or another. And you can therefore set up a set of expenses within your organization, which could be either a portion of your executive staff, maybe the entirety of the executive staff, some of the fiscal staff, information technology, some other functions that benefit the organization as a whole, and identify those as the costs that you're going to cover under your indirect costs. And then basically your other costs are the ones you're going to cover through direct costs. Obviously, in a lot of your COC budgets, it's very clear. Case managers are clearly working on supportive services. Folks who are doing housing quality inspections are probably working under, being billed under the rental assistance line. All those things are very, very clearly direct costs that work strictly on behalf of that one project that your organization is working on. But other things like the executive director, like certain parts of the fiscal staff, really work across the agency, and depending on how many different contracts and projects that you have, it becomes very difficult to assign those particular staff to those particular projects. And it works a lot better if you can just say these are all going to be in our indirect cost, and we're going to cover them through our indirect cost rate. Next slide, please. Yeah, so there are, just for your information, this is how the federal government deals with stuff. They really see there are two different sides to the indirect costs, and this can help you look at those costs that you may be able to cover. There are certain facilities costs that, again, are going to benefit the overall organization. Again, if you can identify, like, this is the office where our case managers work, and case managers are just working on one specific grant, then you can clearly charge that off expense directly to the supportive services budget line. But on other things where there are other larger buildings, where there are common areas in the buildings and things like that, that clearly you can't allocate to a specific grant and stuff like that, you would consider them to be part of the facilities part of your indirect cost. Again, the other side of the indirect cost is considered to be the administrative cost, the general administrative and general expenses. This is among the reasons why sometimes when we talk about administrative and indirect costs, it gets confusing, because clearly there are a lot of administrative costs that can be considered covered under the indirect cost line. You do have a separate admin budget line on your grants. I'm going to talk a little bit about how you could distinguish those activities, but there are always going to be a chunk of activities that are under your indirect cost things that are general administrative functions for the organization. What we're going to bill under the admin for the COC grant are really going to be those very, very specific costs that we can identify as contributing specifically to the administration of that particular grant. If we could go to the next slide, please. Great. So across the board, I said those 2 CFR Part 200 are basically the federal government rules on what it is that you are allowed to spend federal funds on. So these are the basic rules that govern the spending of federal funds. Anytime you spend federal dollars, you've got to be able to show that that expenditure of funds was both reasonable and it was necessary in order to accomplish the overall goal. But remember, the feds, bottom line to the feds is anytime you're spending federal money, it should be reasonable. That they call that the prudent person rule, which is that if you were spending your money out of your own pocket, would you buy this at that thing? Treat the federal funds as if they were your own and deal with them prudently. Conforming to limitations or exclusions, we know this in the COC program. There's some caps on what you can charge for administrative fees, other things like that. So where there are limitations, we've got those matching funds requirements. So where there are those limitations as to what you can spend it on under the program rules, you've got to follow those. You should have policies and procedures for both your fiscal and for your program operations, and your expenditures of funds should be consistent with the organizational policies and procedures. Obviously, as we said before, one of the things the feds really like is that things be treated consistently. So if we're considering items to be an indirect cost in one grant, we want to consider them an indirect cost in another grant too. We want to treat them consistently across all of our federal awards. Any accounting has got to be in accordance with the generally accepted accounting principles. That's what your auditor, you spend money on your annual audit to determine that your fiscal policies and your records are in compliance with generally accepted accounting procedures. Obviously, if you are concluding something as a match, that's matching fund, you can't charge the federal government for that portion that is covered for the match. And as everything, we say this all the time, that's what we do in our monitoring. It's not enough to do everything correctly. You have to document that you've done everything correctly so that if and when you are monitored, you can demonstrate to folks that you had indeed followed the rules. Next slide, please. Next slide. Oh, here we go. So this is a lot about what we're talking about here. This is when they came up with that 2 CFR Part 200, they came up with a 10% de minimis rate. It is a new opportunity for nonprofits. They recognized when they wrote these rules that having to go through the process of negotiating indirect cost rate is expensive, complicated, and too challenging for a lot of nonprofit organizations. And so therefore, they weren't taking advantage of the opportunity to claim indirect costs because there was just too cumbersome a process to do that. So they basically set up this simplified process to make it easier. So understand, the feds deliberately made it easier for nonprofits to claim these indirect costs. So therefore, they're not saying you can't do it. They are basically saying, we understand you may need these costs to be able to have a viable organization and have adequate staffing. So in order to be eligible for the 10% de minimis rate, you cannot ever have had a negotiated indirect cost rate. So if you're even if you're not using it now, if your organization ever had a negotiated indirect cost rate, you can't claim the 10% de minimis. If you are a state, local government, or Indian tribe, you can't receive more than $35 million in federal funding and claim the de minimis rate. If you do claim it, and this is really important, you can't just claim it on a single COC grant and have the rest of your organization go off operating the way it always did. You really have to make a decision. You're going to claim indirect, in which case you've got to claim it on every one of your federal awards, as long as it's allowed under that federal award. Some of the COVID-related resources that came out, they said specifically in those awards, no, you can't claim indirect costs on these awards. You've got to always check the award to make sure that it's allowable. But if it is allowable, then you must consistently use that on all your federal awards. So be aware, this is not simply something that someone is going to who's writing a COC application is going to check this box saying we're going to claim indirect costs on this grant. This is a decision that really needs to be made at your highest levels of your organization, because it's got to affect all future federal grants. You have to, if you claim it on one, you've got to claim it on all. You've got to treat them all consistently. Finally, and this is very important and also sort of annoying. We talk about the 10% rate, and a lot of people think, oh, good, my grant is for $100,000, so therefore the 10% de minimis rate is $10,000. No, the 10% rate is applied towards the modified total direct cost base. I'm going to go into annoying detail on that, but there are a lot of costs in your grants that are not included in that modified total direct costs. And if those costs are not included, you can't charge the 10% on them. So in virtually no instances will your indirect cost rate, if you're charging the 10% de minimis, will it be 10% of the actual grant that you're getting from HUD? And we're going to talk about those limiting factors soon. Next slide, please. Okay, here comes the modified total direct cost base. Here it is, it's direct salaries and wages. So basically, almost always your personnel costs will be included in the indirect cost base, and the applicable fringe benefits and stuff like that. However, there are limitations on subawards, and there are other limitations on what it is that you claim. Obviously, again, the costs have got to be allowable, necessary, and reasonable. These are really important concepts, and again, consistently treated. I'm going to give you much more detail on the MTC base. So let's go to the next slide, please. Okay, so here are the things that you can't include. And these categories get pretty large, and we'll go into even more detail. So if you are purchasing any equipment with your grant, you can't apply the 10% indirect cost rate to it. Remember, for the most part, the federal government defines equipment as costs that are above $5,000 in value. So most of the stuff that you're going to buy, if you're buying a laptop and stuff like that, you don't have to call that equipment. You can call that a consumable supply. Once it starts, each item comes to a value over $5,000, you start having to call it equipment, and therefore you have to exclude it. If there are capital expenditures, we don't get to often, in the COC program, you can actually ask for funds for acquisition, rehabilitation, and new construction. If you have any of those in your budget, you can't charge the 10% de minimis on any of those capital costs. There are these charges for patient care. At first you think, well, wait, we ain't got patients in the COC program. But when we go into the detail, it turns out that primary health care, mental health, rehabilitation services, substance abuse treatment, all those things can be potentially allowable costs for COC program grants. Guess what? Those are considered to be charges for patient care, so you can't include those expense items. We'll get into some detail. It means that on your supportive services budget, it could be that some expenses included in supportive services budget you can include in the modified total direct cost base. Other expenses you can't include it, and we'll give you real good detail on those things. This next limitation really stinks. It includes rental costs, and HUD has defined rental cost to mean not just rental on office space that you rent for your case managers or other services for your organization, but HUD has determined that rental costs also mean rental assistance, leasing assistance. So if you have got a rapid rehousing grant, if you've got a permanent supportive housing grant, and you've got a rental assistance budget line, you've got a leasing budget line, you can't include any of those actual rental cost dollars, any of those leasing dollars in your modified total direct cost base. So you can see immediately on a lot of COC grants, a lot of the expenses that comprise a big part of our budget we're not going to be able to charge the 10% rate on. Tuition remission, we don't hit that much. Scholarships and fellowships don't concern us that much. Participant support costs, some of the, both under the operating cost line and in the supportive service cost line, HUD has determined to be participant support costs, and so therefore they can't be included. And then finally, if you have any subcontracts, so if you are the recipient and you've got a sub-recipient, basically, and therefore there's a subcontract to you, any costs above $25,000 in a subcontract cannot be included in that the de minimis space. So these are all things. I'm going to now go into even greater levels of detail on this, because unfortunately, this is the really important stuff that you have to either include or not include when you're calculating your rates. So next slide, if we could. Okay, so these are really the specifics about what you can charge the 10% on and what you can't. Again, and I'm doing it by the major budget categories. Under the acquisition, rehabilitation, and new construction, forget about it. Nothing. None of those costs are includable. Forget about it. Under leasing, which can be another budget line, a big budget line for some folks, the only thing you can charge the indirect cost rates are on in terms of, your cost in terms of the payment processing, in terms of doing those monthly payments to the landlords, when you've got to do a housing quality inspection, when you've got to do the lead-based paint visual assessment. It's basically the only thing that you can charge on the leasing line is not the cost of the rent that you're paying. It's just your activities in administering the leasing assistant in terms of, you're making those monthly checks to the landlords, getting the W-9s, all that kind of stuff that you have to do, and doing those inspections. Those are all the costs that you can charge on the leasing line. So it's very, 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 very small portion of your leasing budget could you include. Next slide, please. Things are similar, no surprise on the rental assistance line to what's happening on the leasing. So you cannot include in your modified total direct cost base, you can't include anything that's going out the door on rental assistance. You can't include anything that's going out the door on security deposits or paying for property damages or for rental application fees or late charges. Basically, once again, the only thing you can claim that 10% indirect cost rates on are your agency costs in administering the rental assistance. So is the payment processing, doing those inspections and visual assessments for lead-based paint. But your time in that is the only thing that you can charge indirect on the rental assistance line in your budget. Next slide, please. Okay, this is one that's really challenging. For the most part, on the rental assistance and leasing things was pretty clear. On supportive services, as you can see, it's about half is a lot. Half you can claim the indirect cost rates on, and half you can't. A lot of these are what they call those participant support costs that are taught, or the patient support costs that came up in that earlier slide. So case management is obviously something that you can charge indirect on. Education, employment and job training, housing search and counseling, legal services, life skills training, transportation and outreach. You're doing those activities, you've got staff time associated with that, you can charge your 10% indirect cost rate on. The stuff on the other side of this page here, child costs, moving costs, tuition scholarships, food, mental health services, outpatient health services, substance abuse treatment, and utility deposits, all of those eligible supportive services costs are not costs that you can charge your indirect cost rate on. So, I think virtually everybody is going to have a supportive services budget line in our contracts, because I know a lot of you are subrecipients, but you're still going to have that budget line. So if you're planning on claiming indirect, you've got that supportive services budget line, take a look at how you are spending your supportive services dollars, and make sure you're only charging the indirect on those items that you're allowed to charge the indirect rate on. Next slide, please. Okay, so an operating cost, it's a very similar situation. You can pay for a little more, basically, if you can say a cost has to do with the maintenance and repair of the housing. You can claim it indirect on that. If you've got building security personnel, remember the COC program has got that odd rule that if you're charging security, at least 50% of the units in the building must be supported through the COC grant in order to charge building security costs to the grant. But if you meet that and you're charging building security, that can be covered by indirect, but property tax and insurance, replacement reserves, utilities, furniture, equipment, and property damages, none of those things can you claim indirect costs on. So again, that is going to be a big chunk of what your operating cost budget would be, and a lot of that is excluded. Next slide, please. But wait, there's more. We're also, in terms of administration and HMIS, basically what gets excluded on HMIS is any equipment stuff, and they go pretty far on that. So it's hardware, software licenses, office equipment, office space, and utilities. Those are all excluded. If you charged a fee to HMIS users, that would be excluded as well. However, you can pay for the costs of data collection and contributions. Your staffing, by being the HMIS lead agency, your staffing is going to be covered. It's really just the equipment and space costs that are not going to be covered. Now, this I think this is where it gets a little confusing, and HUD made it very, very clear in this indirect cost toolkit that they considered admin costs to be direct costs, and so therefore you can claim indirect costs on your admin costs, but again, subject to the exclusions. So basically the staff time that's spent on general management oversight and coordination, again, that would mean that, we've got timesheets that are showing, our executive staff had spent this time directly allocated to this project on management oversight and coordination. We've got timesheets that document that. Then we can claim our indirect on top of that salary cost. Similarly, on trainings or environmental reviews that staff is doing, the staff time associated with going to those trainings, conducting those environmental reviews, you can, again, assuming that we've got good timesheets that show that we really did incur the direct cost in performing those charges, then we can also claim the indirect on top of those direct costs. Next slide, please. Okay, I'm not going to spend too much time on this. We know that in addition to the de minimis 10% rate, there is also the negotiated indirect cost rates. There are a couple of things happen in that. As part of that proposal, you're going to basically establish what cost base you're charging your indirect costs on. Everybody's rate and cost base is unique to every agency. You really need to work very closely with your accountants in developing these proposals for it. And on top of that, if you get one accepted, it's got to be renewed every 3 years. And the agreement is going to specify the type of rate, the effective period, If you've got more than one location, it's going to specify what locations that rate applies to and the programs to which the rate is applicable to. I don't want to go in detail about this. It really is a complex process. If you want to go with a negotiated rate, you really need to work very closely with your accountants to develop that. Next slide, please. Okay, now I'm trying to give this example as, so what we know this indirect, but where does it show up? Where are they? And this is where it can get a little confusing. So on the left-hand column, we're showing the totals of the grant. It's a $200,000 grant. And in that $200,000 grant, as you can see, we're paying $50,000 for the case managers, $85,000 for rental assistance. We've got a sub-award of $50,000, and we've got this $15,000 in admin. So then we're going to then calculate and to see which one of these costs can we claim indirect costs on. As we went through, those case management is a supportive service that you can claim indirect on. There was $50,000 that were included in that budget line. We're talking about 10%. So therefore, we can charge $5,000 in indirect costs on that case management line. That means that we've got $45,000 left over with which to pay the case managers, and the $5,000 we can claim as our indirect costs. Remember, if you have to pay that full $50,000 to your case manager, you can't take that $5,000 off for your indirect costs. But if you do have room in the budget, you can pay that $45,000 to the case manager, $5,000 as your indirect cost rate on that. The rental assistance budget line, there's a lot of money in that, but for the most part, we're not, maybe we're really got good accountants. We could, put a few dollars in there for the housing quality inspections and the administration, but for the most part, we're not going to generate much in terms of indirect costs on that rental assistance line. There is that sub-award of $50,000. We have to take off we can only count the first $25,000, which we are doing. And we are saying 10% of that is $2,500. So rather than having $50,000 available for that legal sub-award, we've got $47,500 available for that. Again, there was some staffing on the administration line that we were able to claim the indirect costs on. We said that was the 10%. So that's $1,500 there. So basically what we're showing on a $200,000 budget, we can reasonably claim $9,000 in a direct cost. And so therefore we've got an indirect, and we've got $191,000 that remains available as direct costs for the project. So I just wanted to show you in this calculation, we talked about this 10% de minimis, but as you can see, in reality, it's just translates to $9,000 out of a $200,000 budget, which is what, 4.5% as opposed to 10%. Next slide, please. So again, since I talked about these admin things, I changed this. So obviously, we know the HUD regulations limit admin fees to 10%. The Connecticut Balanced Estate has got its own further limitation to limit those to 7% of the grant. So please pay attention to 7%, not the 10% that is here. As we often talk about in our monitoring, admin costs are direct costs. They really are the direct salaries and wages for folks who are working on eligible admin activities. And it's talking about those eligible activities are developing budgets and schedules, project compliance, negotiating subrecipient agreements, monitoring subrecipients, preparing reports to HUD, resolving audit and monitoring findings, evaluating program results, also conducting environmental reviews, as you can see by there. And so basically, any of those activities, those are all as the extent to which you have either got direct costs, either in terms of timesheets for staff or, bills from outside auditors, or if you've got some outside consultants that do environmental reviews for you, the extent to which you've got those direct costs, you can bill for those. Again, if your agency obviously is going to have legal and accounting services, so you can charge, the pro rata share of the agency's annual audit to your admin line. Also, either any time that you're expending, like right at this minute, on training on COC requirements are time that you can bill to the admin line. And therefore, as long as we got a timesheet that can support that, you could also, if you were charging indirect, apply your indirect rate to those eligible administrative expenses. Next slide, please. Again, as I've said, you can earn your indirect costs on admin funding. The 10% limit or 7% for you guys does not apply to costs that are billed as indirect. They are considered to be separate, so you don't have to worry about that administrative cost limit impacting what you can charge as indirect, and you do not have to total what you're charging for admin plus what you're charging for indirect and try to make sure that's below a number. That limitation does not apply. As I said, keep repeating, admin costs are direct costs, which means you really have to have backup and documentation for anything that's charged under admin. That's not the case for indirect, by the way. Anything that you are able to chart that you're including in your indirect cost rate pool, you don't have to have backup. You do not have to show that you expended those funds on those activities. You can basically, unlike that admin, which you just can't bill a percentage, when it's indirect, you just bill that percentage, and that's all that you have to do in terms of billing for that. The only thing that is important is, basic rule, you don't ever want to be caught billing the federal government twice for the same expense. So anything that you're paying for with federal dollars as an indirect cost, you want to make absolutely certain you have not charged that same expense as a direct expense on any federal grant, because then you're being paid twice for the same thing, and the federal government really does not like that. Next slide, please. Okay, so I'm sorry that this is, not as easily seen, but it is this. If you're going to apply for indirect costs in this grant cycle, you do it by this form, the 6A funding request. I'm sorry, it's not, I just took these screenshots from the detailed project instructions. But basically it's that question 3, does the project propose to allocate funds according to indirect cost rate? And if you want to do it, you have to say yes in that box. Let's go on to the next slide, because I've given some more detail as to how it is that you complete these slides. So here it is. So first you say yes to that first question, question 3, that you're going to allocate funds according to indirect cost rate. Then they're going to ask you on that little table that appears, what is the cognizant agency? If you've got a negotiated indirect cost rate agreement, you're going to clearly, it's a negotiated rate with a specific agency, so you'll identify that agency. If you're claiming the de minimis rate, you haven't negotiated that with a cognizant agency, so you say NA to the question, which is the cognizant agency. The next question they have in that table is, what is the indirect cost rate? If you're claiming de minimis, the rate is going to be 10%. Then they're going to ask, what is the direct cost base? You can do what you should do is do what I sort of walked you through, and you should go through your budget and calculate those costs that are eligible for inclusion in the modified total direct costs, and put that figure here, like it was that $9,000 we're getting that 10% on those items that we include in the modified total direct cost space. That's what you should put in that space there. Then the next question you'll have, it comes after the table. It's one of the questions below that. It's going to say, has this rate been approved? Again, if you've got a negotiated rate, you're going to say yes or no. If you're using the de minimis rate, you say not applicable, because that's not something that is approved by an agency. And then finally, they ask you yet again, do you plan to use the 10% de minimis rate? As the last question, of course, the answer to that is going to be yes. So basically, if you are planning on applying for the indirect cost rates, you need to so indicate on this form 6A, and you need to follow this guidance in terms of answering those questions. And if you do all of that, you will have indicated your intent. Next slide, please. Okay, match. You all know this. I don't need to spend much time on it. Obviously, all costs other than leasing of that are matched by the 25%. There is special language with respect to YHDP grantees. If the applicant is able to demonstrate that it has taken reasonable steps to maximize resources available for youth experiencing homelessness, you do not need to meet the match requirements. So the YHDP ones are a somewhat case-by-case thing. Anything other than YHDP, there is no gray area whatsoever. You must meet that 25% match. If you get, as we know, a few years ago, HUD said that any rental payment that's paid directly to you, if you use sponsor-based rental assistance, if you use leasing, if you use project-based rental assistance, if the rent by the participants is paid directly to your agency and those funds are recorded in your organization's accounting records, then you can claim that as program income and you can claim that as match. Remember, if it is a cash match, your agency has got to actually receive those funds. You show those funds coming into your agency during the course of the program year and being expended by your agency during the course of the program year on eligible program activities. You both have to receive them and spend them during your program year in order for them to count as match. And we know that if you use an in-kind match, that's certainly permissible, but it requires a fair amount more of record keeping, both in MOU upfront miles of reference that as an attachment to the application, as well as obviously anything that you're counting as an in-kind match must be eligible under the COC program regulations. And on top of that, if, for example, it's substance abuse treatment services that you're providing, not only do you have to have that MOU from that treatment provider saying you're going to provide those services at the start of the program, but at the completion of the program year, they're going to have to document that they provided to, specific program clients, participants who are eligible, they provided 35 hours of group counseling sessions and they're billed at X dollars, and so therefore the value of that match was Y dollars, and you need to be able to document that to charge the in-kind, which is why we generally recommend, when at all possible, using a cash match. It is an easier one to document. Next slide, please. Yes, so this is what we have talked about before about, this is directly from that 2 CFR Part 200. It says unrecovered indirect costs may be included as the cost sharing or match, but it requires the prior approval of the federal awarding agencies. So whereas you have a potential to use your unclaimed indirect as match for the project, you can only do that if you have advanced. You've got to go to the HUD field office saying, not only are we claiming indirect, but we'd like to use the indirect that we're not actually going to be able to receive because there's just not enough money in our budget. We want to be able to count that as our match on the project. And once you receive, if you get HUD's permission to do that, then you can count that those indirect funds that you are eligible to receive, but were not able to draw down as part of meeting your match requirements. But remember, you need to both indicate that you're intending to charge it, get that advance permission from HUD to do it, and then you are good. Next slide, please.
Howard, do you want questions if they are now, or do you want to wait till the end?
I think I'm really close to the end, so let me just
Okay.
wrap it up, and then we'll have time. So these are just the steps that I just walked you through. So I don't need to go over this again. Again, probably not too many circumstances where we're going to be using these indirect costs as match, but it's something to be aware of. And remember, it has that limitations of requiring that advanced HUD approval prior to doing it. Next slide, and I think this should be near the end. Yeah. Okay. So are the questions in the chat?
Yeah, and I think only the last one is not answered already.
Okay. Oh, really? Let me. I try to avoid looking at the chat while I'm talking because I stop talking and lose my place and everything else goes wrong. Okay, yeah, so the MTDC applies only for those with the de minimis rate. So if you've got, a negotiated indirect cost rate agreement, part of that is going to specify what it is that you get to charge indirect costs on. Sometimes it's just salaries, sometimes it's salaries and benefits, sometimes it's other things. But a lot of times when you see these huge indirect cost rates, like 180% or, just huge rates, take a look. It's going to generally mean that the base that they're charging it is going to be a much smaller base. So while the rate seems high, they're really only going to be applying it to a smaller sum of money. Yes, so not, again, all right, the question is answered, thanks. So we'll just say that it's answered. The slides are going to be posted, they are posted, and blah, blah. Can other federal funds be used for cash match or on a sale? Yeah, so in terms of match, the only limit, you can only not use funds as match where the federal government just specifically says in the program, these funds cannot be used for match or cost sharing things. So as long as the federal rules do not prohibit their use as match, you're allowed to use them as match. So it really is, you got to look at any program that you want to use as match and look at the regulations and make sure that there's nothing in there that says you can't use them as match. Okay, and from Katie saying, yes, that the stuff that I was taught, this was new language in the NOFO about the about using, best resources for youth to meet the match requirement that did not apply to prior year's grants. So that is an important clarification from Katie on that. Yes, if you're using, and it's either cash or in kind, or you could use both. But again, we always recommend, we think it's simplest to use, and if you can do it, just use the cash match. It's cleanest and has the least amount of service associated with it. Now, well, so if you have this next question, you've got a negotiated indirect cost rate. So we've got to look at what your negotiated indirect cost rate agreement says, and it's going to tell you as part of that agreement, it's going to say what it is that you can charge your indirect cost to. I would doubt very much it's going to, it'll include things like rental costs and leasing costs as part of what you can include in the base that you can charge the indirect. As I said, normally they are very heavy. They really are focusing on personnel costs, not these other than personnel cost items, but it's really going to be specific to every negotiated rate is unique to that agency that has it. And it's going to specifically say what it is you can charge your indirect cost against. And that is what is going to govern it. I think, is that the question? I think that's the questions that I am seeing.
Yeah, that's all I see. Does anybody else have any questions?
Oh. Well, I came in late to the game this morning. I know you all have been talked at for quite a while before I started barking at you too. So thanks for all your patience. This is about as tedious a content as you can have, so I apologize for that. But it ain't my fault. It's what it is. But hopefully this helps clarify some of this mystery. I do recommend strongly that indirect cost toolkit that we have the link to above. If you're really planning on claiming the indirect cost rate for you, really take a look at that and be very clear. I mean, HUD took a very strict interpretation as to what could be included in the modified total direct cost base. So you really want to follow that guidance very carefully, because like everything else, you don't want to be charging that rate on costs that HUD now has clarified to us, are not allowable to be included in that. So I think I am ready to conclude this portion of your session today. It's been my pleasure to visit with you this morning.
Great.
Thanks, Howard. And thank you everybody for attending. Like we said in the chat box, this is posted now to the CT Boss website in the HUD competition section. And we will separate out the separate slides, and there will be 2 separate recordings, one for renewal apps and one for this indirect cost rate. They will both be posted